Hi guys, Ben here and welcome to Motivation to Invest. Due to the recent global pandemic, travel restrictions have been implemented and the planet has been put into complete lockdown. With the economy in deep freeze, governments from around the world have printed trillions of dollars worth of currency to stop things falling apart. From $65 billion in the UK to over $2.3 trillion in the US. Being released as stimulus packages. Now, although this may seem great in the short term as a way to prop up the economy, in the long term, this money has got to come from somewhere. In the past, when vast amounts of money was printed and pumped into economies, this led to hyperinflation, which happened in Germany during the 1920s, and more recently in Venezuela. This is where the value of paper currency effectively goes to zero. Now, gold has always been a natural hedge for investors during recessions, but in these times it seems as if it's shining even more than normal. So in this video, I'm going to discuss why many great investors think gold is not just a safe bet, but could increase to over $10,000 per ounce. I'm also going to outline how you as an investor can invest into gold easily. Let's dive in.
Coming in, flex, I just wanna win.
Welcome back to Motivation to Invest. Before we get started, go ahead, smash that like button for the YouTube algorithm. That allows us to continue providing you with free valuable content like this. I post videos every week on stock market investing tips and strategies. In addition, I post stock pick videos on stocks that I personally have invested in myself. So if that's something that you want to keep updated on, be sure to hit that subscribe button and make sure the notification bell is turned on. That way you'll get updated when these future stock picks are at tremendous prices. Now let's get into the video. So what's so special about gold? Gold has been the world's most reliable currency since civilization began. It was first recorded to be used as a currency in 600 BC, before being adopted by the Egyptians, Romans, and then of course, modern civilization. Gold was used as a currency due to its unique properties. This glowing metal can be melted down and forged into gold coins, shapes, and jewelry. It's also anti-corrosive, so will literally last thousands of years without rusting or corroding like other metals. In Tutankhamun's tomb alone, they found his coffin was made from 1.5 tons of gold. Now, one of the main properties of gold is its rarity, with the total amount of gold ever mined adding up to just over 171,000 tons. To put things into perspective, all the gold in the world could fit inside a cube with sides of just 20 meters or 67 foot. This would reach 9.8 meters above ground level if on the Wimbledon Centre Court. So is gold backing our currency? Well, you may not know this, but gold is no longer backing the majority of currencies throughout the world. We used to have what's called hard money, which is real money backed by real assets, such as gold, silver, nickel, and copper. Then we had claims on hard money. This was paper money which could be exchanged for gold and was promised by government. If you read an old $100 bill, it says $100 in gold coin payable to the bearer on demand. These days, however, it's what's called a Fed-based fiat currency, which is based on the faith we have in the economy. So why did governments stop backing their currencies with gold? During the Great Depression of the 1930s, mounting unemployment and spiraling deflation caused many issues. The US government found it could do very little to stimulate the economy and deter people from cashing in deposits and depleting the gold supply. The US and other governments kept interest rates high, but that made it too expensive for people and businesses to borrow. So in 1933, President Roosevelt cut the dollar ties with gold, allowing the government to pump money into the economy and lower interest rates. Most economists now agree 90% of the reason why the US got out of the Great Depression was the break with gold. Now, does all this printing of money and decreasing interest rates sound familiar? Moreover, up until the 1970s, US continued to allow foreign governments to exchange dollars for gold, until President Nixon abruptly ended this practice to stop dollar flush foreigners from sapping US gold reserves, in his own words. So what is the problem for you investors? Well, wealth can only be created by productivity. That is a value exchange of goods or services. Wealth is not cash. Cash is just one method of storing wealth. You can store this wealth in property, in stocks, in bonds, and many other types of securities. Now, paper fiat currency is backed by the governments, like a type of IOU for wealth. So with the governments printing money like crazy and government debts rising massively, this whole system can effectively become worthless. This is what happened in Germany during the 1920s, as they were printing vast amounts of money to sustain their economy and pay war reparations. This caused the value of the currency, the mark, to become worthless. Thus, people were making dresses out of it, using it for games, and even using it for toilet roll. But this is not just a one-off ancient economic issue. It happened more recently in Venezuela also. Why is this important now? Now, according to Ray Dalio, one of the world's greatest investors, we are coming to the end of the long-term debt cycle, which lasts between 60 and 80 years. This basically means that government debt levels get too high, and the methods we use to stimulate the economy stop working. A new currency must be created, and we must revert back to hard currency, which is usually backed by gold. Do you see the link with gold prices? So due to this and the fact that gold is a natural hedge for investors during recessions, many of the top, most iconic investors have predicted gold levels to rise to an incredible $10,000 per ounce. And it's not just during recessions that gold prices have risen. They have risen consistently over many, many years through boom and bust. Now, not everyone is a fan of gold. Warren Buffett doesn't like it at all, as it doesn't pay a dividend and it doesn't produce anything of value.
But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it, all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1 year period, 5 year period, any asset can outperform another asset.
In the words of the great investor Ray Dalio, if you don't invest in gold, you don't know history. And I do agree with his thesis up to a point. I believe every investor should have a small portion of gold in their portfolio, at least. Conversely though, I also agree with Warren Buffett in that gold doesn't produce anything, pays no dividend, and is only worth what someone is willing to pay for it. Thus, an equivalent amount of stock for the same price will be worth much more value to me personally. Thus, I only have a small portion of my portfolio in gold. However, I do believe gold is a great hedge in recessions, and thus I may increase my allocation in the future. So how can you invest in gold? Well, you can invest in gold by purchasing gold coins physically or gold bars, but this is time-consuming, laborious, and not practical at all. Instead, I recommend using an ETC fund or exchange-traded commodity. One of my favorites is the iShares Physical Gold ETC. You can find this ETC on many of the free trading apps. I personally invested into it using my Trading 212 account. You can get a free share worth up to £200 or $200 when you sign up for Trading 212. I'll leave that in the link below. Your thoughts on gold as an investment? Let me know in the comments below. I aim to reply to every single comment. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex. I just wanna win, LA BB, who we running with? Coming in, yeah, flex. I just wanna win.